Welcome to Stock Knowledge and News with Arieous Invest, your trusted source for updates, earnings reports, and actionable insights to sharpen your stock market game. Join us as we explore market trends, decode the latest news, and empower your financial journey with expert stock knowledge. This is Trading Reimagined. Let's get started.
All right, so you ready to dive in? Today, we're going to unpack something that's got the entire market on edge, right?
Definitely.
Interest rate cuts. It seems like everyone's waiting with bated breath to see what the Fed decides this week.
Yeah, it's a big one. And, it's not just about whether they cut or not. It's about what that decision signals about the economy.
Exactly. And what we've been seeing is that investors are really laser-focused on the upcoming inflation data, almost like it's the missing piece of the puzzle.
It is, kind of. It could be the thing that tips the scales for the Fed.
Okay, so for our listeners who may not live and breathe finance, can we quickly break down why interest rate cuts matter so much? I mean, what's the big deal?
Sure. Think of it this way. Interest rates are basically the cost of borrowing money.
Right, like for a mortgage or a car loan.
Exactly. When the Fed cuts interest rates, those loans become cheaper, which can stimulate the economy. People are more likely to buy houses. Businesses are more likely to invest. And all of that can boost economic growth.
So in a way, it's like giving the economy a little caffeine jolt.
Kinda, yeah. But just like with caffeine, there can be downsides.
Like what?
Well, one of the big concerns is that cutting rates too soon could actually make inflation worse. Remember last year when prices for everything were going through the roof?
Oh, yeah, I definitely felt that at the grocery store.
Right. Well, if the Fed cuts rates and the economy heats up too quickly, we could see that happening again.
So the Fed is in a tough spot here. They want to support the economy, but they also don't want to unleash the inflation monster again.
Exactly. It's a real balancing act.
And to make things even more complicated, they've got the job market to worry about too, right?
Absolutely.
I mean, low unemployment's usually a good sign, but if it gets too low, it can push wages up, which then can
fuel inflation.
Yeah.
Yeah. It's all interconnected.
So how does all of this play into the anticipation surrounding the inflation data?
Well, the Fed's been pretty clear that they're data dependent. They want to see evidence that inflation is truly under control before making any big moves.
And this upcoming inflation report is a key piece of evidence.
Exactly. If the report shows that inflation is cooling down, the Fed might feel more comfortable cutting rates. But if inflation is still hot, they might decide to hold off.
So investors are glued to their screens, waiting to see if this report gives the Fed the green light or the red light on rate cuts.
Pretty much, and that's why there's so much anticipation right now.
Wow. Okay, so this is all fascinating stuff, but let's bring it down to earth for a second. What does all of this mean for, regular folks? Like, how could the Fed's decision actually impact our lives?
It can have a real impact on your personal finances. For example, if you're thinking about buying a house or refinancing your mortgage.
Ooh, yeah, interest rates matter a lot there.
They do. A rate cut could mean lower mortgage rates, which could save you thousands of dollars over the life of your loan.
On the flip side, if they don't cut rates, those mortgage payments could stay high.
Right, and that's just one example. The Fed's decision can also affect things like car loans, credit card interest rates, even your savings account yields.
So this is definitely something that everyone should be paying attention to, even if they don't follow the financial markets super closely.
Absolutely. It's about understanding how these big economic decisions can ripple down and affect your day-to-day life.
This deep dive has been really enlightening. I feel like I have a much better grasp on what's at stake here. So just to recap for our listeners, investors are holding their breath for this inflation report because it could make or break the Fed's decision on interest rate cuts.
Right.
And that decision, in turn, can have a huge impact on borrowing costs, economic growth, job creation, and even inflation itself.
It's a chain reaction, really.
Absolutely. Well, thank you so much for breaking all of this down for us. It's been incredibly insightful. And for those of you listening, here's something to think about. Let's say the Fed does decide to cut rates this week. What could that tell us about the state of the economy? And how might it affect your own financial decisions in the coming months?
That's a great question.
Yeah, it's definitely something to ponder.
It is. It'll be interesting to see how things unfold.
For sure. Thanks again for joining us, and we'll catch you all on our next deep dive.
See ya, da.
Arieous Invest. Trading Reimagined.